Hello traders, my name is Frank Paul. I'm the developer of Forex Profits with COT. This is a special presentation coming to you on Monday, August 18th, 2008, entitled The Trading Power of Forex Profits with COT. What I'd like to do within this presentation, which should last no more than about 15 minutes, maybe 20 maximum, is to introduce you to our course and our service, explain a little bit what it's about, and give you a bit of an idea for how this product can help you with your trading. I've been receiving some positive feedback from subscribers to Forex Profits with COT, and again, that's available exclusively at forexmentor.com. You will not find this service or anything like it anywhere else. A lot of our subscribers are enjoying profitable trades, both with the 9 currencies that we cover in our course. I'll get back to that in just a few minutes, as well as 4 bonus markets that we also cover. One of those bonus markets is gold, which is not going to be the subject of our presentation, but I just wanted to give you an idea of the trading potential that we sometimes are able to dig up. Every week in the package of materials that you receive, one of them being a weekly summary in PDF format, which provides some text-based information, some market calls. Here are a few examples of calls we've made on spot gold. August 2nd, and this is a direct verbatim quote from our report. We said that there's no doubt about it, corrective wave 2, that's an Elliott wave concept, corrective wave 2 on the daily chart is finished, so down she goes within wave 3 as we seek longer term targets on either side of $600 per ounce on gold. A week later, August 9th, the quote again from our weekly summary was a continuation of our theme from the past 2 weeks. We are now in wave 3 down and closes below support at $845 an ounce will provide additional bearish confirmation. Longer term targets lie between 542 to 731. So again, those are direct verbatim quotes. I'm not making anything up here after the fact. And I'm happy to say that as of Friday last week, gold closed at 786, which is getting into our target range. And of course, if you follow gold, you know that the story last week was an extreme collapse. And all of this, again, was predicted going back 2 weeks ago now. At this point, it's logical to ask, well, what is Forex Profits with COT? What does it involve? Part of what we do is provide you a comprehensive educational resource, in other words, a training course, which you can refer to again and again. And part of what we do is provide you a weekly market subscription service. We begin the proceedings with a 7-part introductory course broken down into modules. And what this course does is give you a good basic grounding in the commitments of traders, and then we follow that up with a descriptive overview of the charting package that we've developed. We don't show you just 1 or maybe 2 charts. We have a full suite of up to 9 COT related charts for each of the markets we look at. Now, in addition to the core training course, every week on Saturdays of each week, you will also receive notification by email that you have access to the updated chart reviews for a total of 13 markets, including 9 currencies and 4 bonus markets. We just talked about gold a moment ago. The 9 currencies are basically the dollar majors, such as Euro USD, Pound USD, and we do 1 cross pair Pound Yen due to popularity among our subscribers. And the 4 bonus markets include the Dow Jones Industrial Average, Light Sweet Crude Oil, Spot Gold, and Spot Silver. So that video-based AVI market subscription review totals at least 2 hours of material each week. So we're very comprehensive in our scope. What we're trying to do here is make you smarter about using COT information than you might have believed possible and extract maximum trading advantage. COT is a powerful indicator of market sentiment, but it is very easy to mistrade it or misapply it if you don't have some kind of means of filtering the signals and putting them into context. And by way of extensive reference to Elliott wave analysis, that's what we're trying to do. We're trying to marry together COT signals and Elliott wave, together the most powerful contrarian market indicators available. Now, I don't want you to just take my word for it. Again, I talked about positive feedback we get from subscribers, and I'd like to share one with you. This is from one of our subscribers, Suresh Karela, and what I've done here is just taken a recent email I've received from Suresh. I've not doctored it or edited it in any way. This is exactly as how I've received it. The only thing I've done was block out Suresh's email address at the top, just in respect of his privacy. But other than that, this is exactly verbatim the email I received from Suresh. And what he's doing is sharing his experiences trading pound yen over the course of, less than a week actually. We're talking about Friday, August 8th through Wednesday, August 13th, so just slightly less than a week. And what we're talking about here are some trades on pound yen, primarily short with the trend, and that pertains to a series of recent market forecasts on pound yen where we had noted that there was a likely substantial short move setting up. So let's take a quick look at this. We had a short position on Friday the 8th. Suresh talked about how the profit potential was much greater than was achieved. He decided to take profit early. Nothing wrong with that, just to be certain. And of course, at that point, the trend was just getting going to the downside. So nothing wrong with that. 133 pips winning trade. Next, Suresh took a counter trend long trade worth 70 pips. And finally, filled out the week nicely with another short pound yen worth 364 pips. And you add that all up, it's 567 pips in less than a week. And to summarize further, we had 2 trades with the trend, i.e. short, good for 497 pips, and 1 trade counter trend, good for 70. So if the market forecast is calling for weakness or advocating a short position, why would one trade long? Well, the important point here is to understand the market environment that you're trading in. There's nothing wrong with taking high probability counter trend retracements as long as you know where you are in the overall trend. You know what you're doing, you know which side of the market it makes sense to be on. So with a complete picture on what was happening with pound yen, Suresh was able to take 2 trades with the trend and 1 counter trend. Now, interestingly enough, Suresh followed this up with an email not a day or two later, a follow-up, and he actually, during that entire 1 week period, had a couple more successful trades, good for 170 pips, both on pound USD and another on pound yen. So in fact, his actual trading total for the week ended up at plus 737 pips. Now, I wouldn't want to misguide anybody or mislead anybody that 500, 700 or more pips every week is guaranteed slam dunk. Suresh has some very good, well-developed trading skills, and that's what you need to do to marry together with a reasonably good quality markets forecast service such as we're providing here. So we're not providing high probability passive trade signals saying go short here, go long here. What we're doing is giving you that context to help take trades on either side of the market potentially with a greater degree of confidence. And I think this email from Suresh does a nice job documenting that.